What is going on, traders? Welcome back to the Traveling Trader. In this video, we need to talk about Palantir. There are a few things pissing me off in this space right now, and Palantir is just the latest culmination of that. Now, as you may know, Palantir dropped below $20, currently trading at the time of this video at $19.71. It has this massive bearish head and shoulders pattern that you see here on the 1 day, and it is currently confirmed because it broke below the neckline. We saw the same thing on Peloton as well. So later in the video, I'm going to be discussing how you should buy Palantir and how I would trade it going forward. But first, there's something that I have to address. Because I'm a YouTuber who talks about stocks, options, and trading in general, it makes sense that a lot of my recommendations are in that space. And I've been seeing a ton of videos, and obviously I haven't clicked on each one of these, but just based off of the title and the thumbnail, I've been seeing a ton of videos projecting Palantir to be a $1 trillion company. Some projecting that Palantir has a 22x upside or a 25x upside. And really, I don't know if this is just to try to drive traffic to their YouTube channels. And it's clear that they're just parroting each other and maybe riding some of the bullishness that Cathie Wood sees on Palantir. A lot of it is incentive driven too. That's just how the YouTube algorithm works. If they see that somebody got a ton of views saying that Palantir is going to 25x, that would obviously incentivize other YouTubers to do it. So I'm not sure how much of it is a sincere belief that Palantir will 25x. But do you guys know what a $1 trillion company looks like? For context, there have only been 4 $1 trillion companies in US history. And the names are not that hard to guess. Apple, Microsoft, Amazon, and Google. That is it. Those are the only $1 trillion plus companies we've ever had in the United States. Think of other powerhouses you know. Facebook, Berkshire Hathaway, JP Morgan, Tesla. Those have never hit the $1 trillion mark. Berkshire Hathaway stock is over $400,000 a share. My point is that to get to $1 trillion, you have to be a historically exceptional company with an insane revenue potential. We're talking about hundreds of billions of dollars a year in revenue, and some of these $1 trillion companies have over $100 billion sales in a quarter. Palantir's current entire market cap is $39 billion. Just for reference, Amazon earned 3 times Palantir's entire market cap in 1 quarter. So again, realistically, are you making these videos for the views? Or do you really believe that Palantir is going to be among some of the most elite companies the world has ever seen? This video has 148,000 views. We see another video here with 116,000 views. These are all projecting that Palantir is going to be a $1 trillion company. This other video made 5 days ago from the time of this recording, 102,000 views. There is clearly a market for saying that Palantir is going to be a $1 trillion company. Now, in full disclosure, I currently have some Palantir cash secured puts open, and we'll talk about Palantir trades in a second, as I promised you. But here are some of the harsh truths about Palantir. Palantir is not a new company. Yes, it recently IPO'd last year, but it has been in business for 2 decades, 20 years, and it has never turned a profit. Now, it doesn't mean that there isn't a market for Palantir's big data platforms. As a matter of fact, it continues to sign new contracts both in the public and private space. However, the reason that it isn't profitable yet is because their products are hard to scale. They are bespoke for every single customer, meaning they are custom made and unique for every single customer. That is part of the reason that although their revenues are growing, they continue to have high costs. Now, one thing that should be concerning to everyone is Palantir's insider selling. Over the last 12 months, $417.5 million worth of Palantir shares were sold by insiders. If you go to a site like marketbeat.com, you can look at each of these transactions because they have to be reported publicly since Palantir is now a public company. And this insider selling continues to today. Just yesterday, Alex Karp sold 638,000 shares. 2 days before that, he sold another 638,000 shares, according to marketbeat.com. This is part of the reason that Palantir's price is now dropping. And you have to ask yourself, in an environment when most insiders of successful companies are buying back stock, why is Palantir actually selling their stock here? Well, look, we'll never know the real reason, okay? I mean, we all know that, because even if the insiders are asked about this or are interviewed about this and they do give a reason, it doesn't mean that you could take that at face value. They're going to say anything because they are a public company. But there is something to be said about following the smart money regardless of what they say. Now let's take some of these preposterous YouTube headlines and thumbnails out of the picture and let's focus on what is Palantir's real valuation based on what we currently know. There is a tried and true valuation strategy called discounted cash flows, or DCF. In summary, the discounted cash flow model tries to determine a current value based on a company or an investment's ability to generate future cash flows. So for instance, based on all the information we have today, we can project Palantir's ability to generate a certain amount of cash flows in the future. And then we discount those cash flows based on the model and try to attribute a dollar value to them today. Because future cash is worth a lot less than cash today for a couple of reasons. One is inflation, and two, the theory says that a dollar today is worth more than a dollar in the future because you can actually invest that dollar today. Now, I won't bore you with all of the calculations, but if you Google discounted cash flow valuation Palantir, you'll see that most DCF models will find Palantir valued between $20 and $25, which, aside from this Wall Street bets infused pump here, is what Palantir was trading at this whole time post-IPO. So even though the DCF valuation may seem very conservative in the face of trillion-dollar valuations, $1 trillion, I would much rather take that number when I'm looking to invest in a company that has yet to be profitable after 20 years, even if I'm still bullish on its future. All right, so with that said, and our conservative valuation in mind, I do believe that there is a space to trade Palantir here. The easiest one that we'll get out of the way is obviously you can dollar cost average or just buy Palantir shares here at under $20. Now, portfolio distribution is key. So on an unproven stock like Palantir, you do not want to make that 50% of your portfolio. This is just me talking. You can do what you like. Now, the best thing you can do here, in my view, is sell a cash secured put. I did a whole video on cash secured puts. I also did a full-on options course. So if you've ever wanted to learn how to trade options and you've been intimidated by trying to learn, the course starts in the way beginning explaining what is an option and ending with some of these more complex strategies like cash secured puts, iron condors, covered calls, etc. But the whole idea behind a cash secured put is you would sell a put at a strike price at which you want to buy the stock. So if Palantir is currently trading at $19 and change, here's how this would look in practice. You would pick a somewhat long dated expiration date. We could pick August 20th, 2021. And you could sell a cash secured put at, for instance, $19, the $19 strike price. We could sell that currently for $2.16. Now, what that means is that we would get $216 for every contract that we sell. And if Palantir never hits $19 or below, and we never get assigned this put, we get to keep the entire $216. If Palantir hits $19 or below and we get assigned before expiration or at expiration, then you would be obligated to buy 100 shares of Palantir. However, if this is a stock that you are bullish on and you've wanted to buy it at a discount, this is a perfect case scenario. Because your cost basis on Palantir would not be $19, we collected $216 to sell the put. So your cost basis on Palantir would be $16.84 if my math is correct. $16.84. Now, if you look here, I actually did sell a cash secured put on Palantir. Was it yesterday or the day before? It expires in November. It's the $20 put, but I sold it for $3. That means if I get assigned, then my buy-in or my cost basis on Palantir will be $17. And if I don't get assigned, then I get to keep that $300 per contract. Now, I also did this with NEO, which I'm up 25% on that cash secured put. We also did this with Tesla, up almost 40% on that cash secured put. If you want access to all of our trades where I sent all of these trades out, link is in the description below. Now, yes, on Palantir, it currently shows that I'm down 19%, but that is fine because I do want to get assigned if Palantir drops below my strike. I want the chance to buy Palantir at 17 bucks, which is why I sold this in the first place. It's like collecting insurance for a chance at buying Palantir at a lower price than it is today. Now, the other thing you could do is a covered call or a poor man's covered call, meaning you would either buy 100 shares of Palantir now and you would sell a call or a covered call above the price that you bought Palantir at. So if you bought 100 shares of Palantir now at $19.77, you can go out to, let's just use that same August expiration and sell the $22 call for $1.85. What that would do is it would lower your current cost basis because you're receiving $1.85 for selling that call. So your cost basis on Palantir would be $19.77 minus $1.85, which is $17.92. And if by August 20th, Palantir gets back to 22 bucks and you get assigned, then you'll be forced to sell your shares, but you'll be selling your shares for profit because you bought them for $17.92. I think that's what I said. And you'll be selling it for 22 bucks. So over $4 per share in profit. Now, if you're ultra bullish on Palantir in the long term, what you could do here under 20 bucks is buy what's called a leap. I did another whole video on leaps that I will link here. But essentially, it's a long dated call option with a high delta. So in this case, you would buy the $15 call, for instance, on Palantir expiring January 2023. Now, this is much cheaper than buying 100 shares of the stock, but this option, because there is a lot of delta in it, will move very similar to the stock at almost 80% of the stock's value. So for every dollar that the stock goes up, this option will actually go up by 80 cents, but it costs you a fraction of the price that 100 shares would have cost you. Anyway, traders, that is it for this video. I hope you got value out of this video. If you did, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what you think of my assessment of Palantir and some of these trades that I discussed. And if you've always wanted to learn how to trade options, consider checking out the course below where I go over all of these strategies that I talked about, whether it's a covered call, cash secured put, leaps, etc. You'll have access to it for a lifetime. And if you want to check out the trades, the private trading group, and the live streams that we do every week, that link is also in the description. Subscribe to the channel, hit that notification bell, stay safe out there, traders. Peace.